Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better your portfolio. We continue to see, obviously, some slow improvements in the U.S. economy. Friday's numbers that came out on the job numbers were really weak, as a matter of fact. And I talked about those earlier last week that I thought they might be weak just because of the initial jobless claims in the ADP reports. So we were spot on there. Now, at the beginning of this month, we did reduce our equity exposure by over 40% based upon our relative strength, our global tactical opportunity strategy within every one of our client portfolios. So we did reduce our equity exposure significantly, and our portfolio month to date is significantly outperforming the base index, the S&P 500. One of the most important things that I stress to investors, and one of the things that we run within our strategy every single day, is really looking at where things are trending. And I talk about our global tactical opportunity portfolio, which runs on a strict relative strength ranking. Of course, it's all proprietary how we do it and the inner workings of that. But I can tell you in general, investments either trend up or they're trending down. There's no ifs, ands, or buts. And personal bias, emotions, or personal thought patterns on which way something is trending obviously is taken off the table. What I always tell investors and what we run in our strategy is we do not run a buy and hold approach. In fact, I got a call from one of our radio listeners on Sunday, and the gentleman basically said to me, "Hey Brian, you know, I'm really more of a buy and hold. I buy good quality stocks and I hold those." And I said, "That's great when they're actually doing well. But why, when something's going down, why would you own something that's going down 30, 40, 50%? His comment to me, well, I don't know when to sell. I said to this gentleman, I said, then that means you don't know when to buy either. At the end of the day, buy and hold is not an investment strategy, and I'll go back to a trend is your friend. Relative strength investing, trend analysis is extremely important in any asset category, not just stocks and bonds, but currencies, oil, gold, real estate. It doesn't matter what you invest in. Investments are going up or they're going down. As I've always told you, own investments that are trending in the right direction and are relatively stronger than other investment sectors. You need to look at all investment sectors though, because what happens when you do that, you actually encompass all asset categories, not just stocks and bonds, and you now have the real opportunity to perform not only in up markets, but in down markets. Because we use primarily ETFs, or exchange traded funds within our client portfolio, we have access to what's called an inverse fund. There are many inverse funds basically that do the opposite of what that base index does, meaning, let's say the stock market starts trending down in a recession. Relative stronger would become an inverse fund that actually goes up when the stock market goes down. So it's a hedge in our portfolio. The same thing will happen with bonds. We don't currently own any inverse funds, but there will become a day that we may encompass those in the portfolio if they become relatively stronger than other asset categories and they become the fastest horse or horses within our portfolio. Interest rates obviously at all-time lows. Bonds are overpriced on almost every extreme, especially the long bond primarily, and I've told investors to stay away from those. We don't own any inverse ETFs that basically do the inverse of what bonds do, but I could definitely see some point in time when rates start to move up. Our strategy is perfectly aligned to take advantage of those opportunities, whether the stock market is going up, whether it's going down, whether bonds are going up or down, whether real estate's going up or down, currencies, oil, gold, it doesn't matter. At the end of the day, remember this, folks, buying and hold is not an investment strategy. Think about where an investment is trending. You want to own the stronger trending upward investments, and you want to sell weaker trending or downward trending investment sectors. If you do that systematically, you have a great opportunity to better your portfolio. Risk management, in my opinion, is the most important part of money management. There's a time that every asset you own may need to be sold, and the key is, when is that? When they start trending down and they start underperforming the base index that you would track against. Remember, folks, buy and hold is not an investment strategy, and in fact, it could create huge downward pressure in your portfolio. Instead of going into a giant crater on a buy and hold strategy in the next recession, use relative strength investing and market trends and stay in the right direction of any investment sector. When that changes, then that means your portfolio needs to be adjusted accordingly. Protect your principal and look for upside potential and income. This is Brian Resney. Make sure you do listen to this Sunday show. And as always, if you do have friends, family members, or business acquaintances that are looking for a real money management firm, we always appreciate your referrals. And as always, if you do have any groups that would like a public speaker, I do speak at a lot of venues. Again, I love to do public speaking, so if you have a group you'd like to have me come and speak with or to, call our office. We always like taking on new clients who are nice people who want to better their situation. And of course, if you're an existing client, call us if you have any questions about your portfolio. And again, we appreciate your business and your referrals. Have a very profitable day.